All right, welcome back to day two in the Six Figure Capital 14-day course. Today's module is currencies, and this is your exclusive guide to currencies, currency pairs, and trading hours. Now, in today's game plan, again, it's a simple three-step process. We'll be going over currency basics, followed by major, cross, and exotic, and finally, trading sessions. Now, before we go into today's module, I'd just like to review very briefly what we learned in day one. This was, of course, you learned the basic principles of Forex and you learned the 10 need to know facts. So you can trade Forex from anywhere in the world as long as you have internet connection. And you also learned that anyone can trade Forex, and this means you too. You also learned that there are various financial markets you can trade, such as, of course, Forex, stocks, commodities, cryptocurrencies, derivatives, and bonds, and many, many more. But these are the ones I would focus on personally. And for me, I mainly focus on Forex, commodities, and cryptocurrencies. You also learned that in order to become a successful trader, you must consistently work on three main areas, which are mindset, knowledge, and experience. And we touched on those different core fundamentals and various different topics within them. However, we will elaborate on those topics in later modules. So heading into our first topic for today, which is currency basics, you learned back in day one that, of course, Forex is the buying and selling of currencies. Now, there is well over 100 currencies that can be widely traded through the Forex market, so we're spoiled for choice. And there's new currencies being added all of the time, every single year, of course, as new currencies and new countries develop. And these currencies can be bought or sold, and they are traded in what's known as a currency pair, which I'll touch on in today's module. So when you're buying a currency pair, you're expecting the value to increase. So when price rises, if you buy at a certain level and price rises, you're making profit. If you sell and price decreases, you're also making profit. So you can make profit on both ends. Now, these currencies also have what's known as an acronym. It's a three-letter acronym, such as Great Britain Pound, GBP, United States Dollar, USD. Now, the first two letters refer to the name of the country, and the third letter is the currency. So we have Great Britain for GB, and then the final letter is the currency, which is pound. So another example would be New Zealand dollar, NZD. Now, I have listed the 8 most commonly traded currencies, better known as the majors, including their acronyms. And here they are. Here we have our major currencies, which are 8 main currencies which make up most of the volume in the Forex market. We have the United States dollar, we have Great Britain pound, euro, Japanese yen, Australian dollar, New Zealand dollar, Canadian dollar, and Swiss franc. And of course, on the right hand side, we have their acronyms, the 3-letter acronym. So what I want you to do, I want you to screenshot this slide or write it down in your notebook. You will need to remember these currencies over time. These are of course the main currencies in the Forex market that we focus on. Now, every single currency is traded in what's known as a currency pair. So you don't just trade the US dollar, you would trade it against another currency. So currencies are always traded in pairs, and it's a constant competition between the two to see who can gain control. It's similar to a boxing match or any other type of sports. The more money flowing into a country, the stronger that country and currency becomes. So like I said before, it's like a sport. There's a constant competition between the two to see who can come out on top. So let's look at an example of a currency pair. A very simple currency pair. We have Great Britain Pound, US Dollar. Now, the currency on the left-hand side is what's known as the base currency. On the right-hand side is the quoted currency. So here we have the Great Britain Pound being quoted against the US dollar. So it doesn't matter what currency pair it might be, we always know that the left-hand side is always the base currency and the right-hand side is always the quoted currency. So if we take this example, we know that if Great Britain Pound US dollar is quoted at 1.35, now ignore the other decimal points for now, we've got 3 other numbers there, just ignore that, we'll go into that in tomorrow's module. Then we know that 1 Great Britain pound is equal to 1.35 US dollars. Now, in a trading situation, let's say we are buying, for instance, let's say we are trading Great Britain pound US dollar and we're looking to buy. What we're essentially saying is that the Great Britain pound is becoming stronger, it's gaining strength. So the base currency is becoming stronger, and on the flip side, the quoted currency is becoming weaker. Now, this doesn't, when you're buying a currency pair, let's say the Great Britain pound, you expect it to become stronger, it doesn't always mean that the quoted currency is becoming weaker. We could have a strong US dollar and a strong Great Britain pound, but the pound could be stronger than the dollar, meaning price will increase. So when buying a currency pair, you're expecting the base currency, which in this situation is the pound, to become stronger in comparison to the quoted currency. Now on the other side, we have a selling situation. So what we're looking at here is when we're selling a currency pair, the base currency, we're looking for weakness. And mainly what we're looking for is the quoted currency to become stronger. Again, it doesn't mean that the base currency is weak necessarily. It could be that the dollar is just simply stronger than the pound. So when selling a currency pair, you're expecting the quoted currency to become stronger in comparison to the base currency. Now, if the pound was extremely weak, then you would obviously see the US dollar gaining control. If the pound was static, but the dollar was of course very strong at the moment, you would see the dollar taking control. Now moving on to our second topic for today, which is major, cross, and exotic. Now, as mentioned, currencies are traded in what's known as a currency pair. Now, these currency pairs are separated into three distinct categories, which are major, cross, and exotic. Now, majors all contain the US dollar, so major currency pairs, and this only consists of the 8 major currencies we mentioned previously. So we have major currencies, which are 8 main currencies, and we also have what's known as major currency pairs, which all contain the US dollar. So this would be Great Britain pound US dollar or Euro US dollar. So we can see that both of these currency pairs contain the US dollar. Now, major currencies that do not contain the US dollar, such as Great Britain pound Japanese yen, so they're both major currencies, these are known as crosses or minors. And finally, we have the less frequently traded currencies known as exotics. Now, we'll break down the major crosses and exotics on the following slides. So we have currency pairs here. We have the majors on the left. So we have Euro US dollar, Great Britain pound US dollar, all the way down to the bottom we have Australian dollar, US dollar. On the right hand side we have our popular crosses. There are many others, but these are the ones to note, the more liquid, the more active pairs to trade. We have Great Britain pound Japanese yen, we have Euro Great Britain pound, Australian dollar, New Zealand dollar, and at the bottom we have Canadian dollar, Japanese yen. Now, exotic currency pairs are made up of a major currency, such as the US dollar or euro, paired with a currency of an emerging or smaller economy. So as I mentioned previously in today's module, there are new currencies being added to the Forex market almost every year or every couple of years. So these are emerging or smaller economies, such as these currency pairs may be US dollar, Hong Kong dollar, or Euro, Turkish lira. Now these pairs are traded less often than majors or crosses, and this is why we mainly focus on major or cross currency pairs. And to note, the cost of trading these exotic currency pairs can be considerably higher due to lack of liquidity. So for now, I would recommend sticking to major and crosses. So stick to your major and cross currency pairs. Once you're a profitable trader, you can then start looking at exotic currency pairs to trade. Now here are some of the exotic currencies just to note. We have, of course, the Hong Kong dollar as mentioned, which is HKD. We have Turkish lira, which is TRY. South African rand, which is ZAR. So feel free to note these down. By all means, you can just download the currency pairs cheat sheet. So I have put together a 2-page PDF which has every single currency pair that you need to know. So I've included all of the major and crosses in there and the more popular exotic currency pairs. I've not listed all of them because there are many exotic currency pairs that I wouldn't be able to fit them all into one sheet. So I've listed the main currency pairs to focus on, and the main purpose of this PDF that I've designed is simply for you to print this off or keep it open whilst you're trading. And instead of trying to remember all of these currency pairs off the top of your head, you can work off it like a list. So you can work from Euro US dollar and look for a trading opportunity on that trading pair. And if there's none, move on to the next one. You'll move on to Great Britain pound US dollar and you'll work your way down the list. So what to do is download that PDF. It's below today's module. It's called Currency Pairs Cheat Sheet. Download it, print it off, and keep it next to you while you're trading. Now, moving on to our final topic for today, which is trading sessions. Now, as you already know, the Forex market can be traded 24/5, so 24 hours per day, 5 days a week. And this is generally 10 p.m. GMT UK time Sunday to 10 p.m. GMT Friday. So the market opens on a Sunday, it closes on a Friday. Now, throughout this trading week, it is broken up into what is known as 4 major trading sessions, and this consists of Sydney, Tokyo, London, and New York. So you have the Sydney session, Tokyo session, London session, and the New York session. Naturally, there is more trading volume throughout these times as these markets overlap. So you may have the London and New York session, they overlap, therefore there is more volume during these times. So first of all, the market opens with the Sydney session in Australia. So the smallest of the 4 sessions, but this is where the trading day officially begins. There is a lot of activity at the beginning of this session because it's at market open on a Sunday. So here we have the summer trading hours and the winter trading hours. So I've adjusted these. These are the hours that I feel are most suitable for you guys. I've included GMT for UK traders and EDT and Eastern Standard Time for those in the US, so for in sort of New York area. Now onto our Tokyo session in Japan. This is often referred to as the Asian session because Tokyo is the financial capital of Asia. On average, 21% of all Forex transactions take place during this session. Again, all the hours are noted on the left hand side. Feel free to take these down. We personally don't trade trading sessions. We don't base our strategy around trading sessions, but it is good to note when they start and when they finish so you can take advantage of course, market activity. You'll have more activity during certain hours of the day. Now, onto our third session, which is London, UK. It's considered the Forex capital of the world, and approximately 30% of all Forex transactions occur during the London session. And again, we've got our summer trading hours and our winter trading hours, and this is for the clocks going forward and backwards throughout the year. And finally, we have the big one. We have New York in the United States, the city that never sleeps. There is, of course, high liquidity in the morning as it overlaps with the European session. So as I mentioned, this trading session overlaps with the London session. So roughly 19% of all Forex transactions are carried out here. And again, we've got our summer trading hours and our winter trading hours. Now, just as a visual representation, this is what it will typically look like throughout a trading day. So we have the Sydney session. It will open up on a Sunday at market open. Then we'll have Tokyo just shortly after that, which will overlap with the London session. And then you'll have the New York session midday, which will overlap with the London session. So when these sessions overlap, you will typically see more volume than you would previously in a quieter period. And then again, the Sydney session opens back up, going into a new day. And then you have the Tokyo session shortly after that. And then again, this just repeats Sunday to Friday. And this happens every single week for the full year. So this is a visual representation of what would possibly look like for the guys in the UK. Slightly different depending on your time zone, but this is just typically what it would look like when you're focusing on trading sessions. Now, onto our rookie mistake number 2. Of course, you had rookie mistake number 1 yesterday. There's going to be one every single day of the 14-day course. And this is what not to do. And these are real trading mistakes that cost me a considerable amount of time and money. And today's rookie mistake is skipping the foundation. And of course, this is what I done when I first started out. I went straight in for the kill. I learned how to use a technical strategy, a technical based strategy. I learned how to use indicators, but I didn't learn the basics. I skipped the foundation completely and I just went straight in for the kill and tried to make money. So I know it's exciting to learn something new, and I understand the temptation to hit the charts from day one. A lot of guys want to come in and they just want to make profit as soon as they start. But skipping the foundation will lead to disaster and massive overwhelm. If you imagine you came into the 14-day course and you skipped all of it, you came into Six Figure Capital, you skipped the 14-day course and you started on the Harmonic Mastery course, your head would explode. It would literally explode. So that's why we have the courses mapped out. They all interlink. They lead into the next module. So you go from day 1 to day 14. You'll also do the bonus course. And then once you're ready, you will go into the Harmonic Mastery course, the more advanced education. So compare this to a professional football game. For instance, Barcelona or Real Madrid, whatever football team you may follow. If you follow football, compare it to a football team or any other sport for that matter. The manager goes into every game with a solid strategy, starting 11, he knows the formation and in-game tactics. They don't turn up on the day and they go, okay, coach, what team are we putting out today? And he goes, well, I don't know, I've not really decided yet, and it's 10 minutes before kickoff. That just doesn't happen. They know exactly what they're doing ahead of time. It's mapped out. They've got a strategy, they've got a plan, they know exactly what's going on, and that's exactly what you should do in your trading. Treat it like a professional. Now, it's been a very successful module today. I'd just like to wrap it up. A very short module in comparison to day one. Now, we know you can either buy or sell currencies in order to make profit, meaning you don't need to be one-sided. So you don't need to come into trading and just buy currency pairs or just sell. Me personally, I buy and sell currency pairs. I look for opportunities on both sides. You don't want to be one-sided. Trust me on that. So all currencies are assigned a 3-letter acronym. And there are 3 sets of currencies, and these are major, cross, and exotic. And as I mentioned before, you want to focus on the majors and the crosses. And finally, trading sessions. You can take advantage of these trading sessions to trade certain currency pairs during more active market hours. So as these markets overlap, such as the London and New York session, as they overlap, you may be trading Great Britain Pound US Dollar, and you may find that it's more active during these hours of the day. Now, heading into our third module in the Six Figure Capital 14-day course, we have day 3, market terminology. First of all, we'll cover simplifying exchange rates, pips and pipettes, and finally, calculating profit. So I'm excited for day 3, tomorrow's module. Thank you again for joining me on day 2. If you have any questions at all, email me at lewis@sixfigurecapital.com, and I'll see you on the next video.